Good afternoon, everybody, and thank you very much for joining us today on this Kingsbridge webinar. My name's Ryan. I am the IR35 project manager here at Kingsbridge, and I'm very pleased to say that today I'm joined by the head of tax, Andy Vessey. I'll let Andy introduce himself in just a moment, and we'll get to grips with some of his credentials and really what we're going to be talking about today. But just to cover off a few bits of housekeeping, first of all, this session is going to be roughly 1 hour in length. There will be a short Q&A at the very end of the session, and you'll also see that there is a comments and Q&A section in front of you. So you'll be able to ask as many questions or queries that you may have throughout this webinar for Andy at the very end. Appreciate though that we might get quite a few questions and queries, so we'll try and answer as many of them as we can, or kind of the common themes, and then at the end of this session, any that we can't answer, we'll send some of the answers to those in a email with also the recording of this session as well. A recording of this session will also be going onto YouTube, so we'll make sure that we provide you all with that link afterwards, so if there's anything that you missed or want to cover off again, you can do so by kind of watching it again there. But for the time being, whilst you've still got a few more of you joining, we'll just give it a moment or two to let those people just continue joining the session, and we'll get started in just a moment. Okay, we'll just give it another moment or two. I can still see there's a lot of people joining in the lobby there, so we'll just wait a few more moments, as I say, and then we'll get started. Good afternoon, Andy. Thanks for joining us today.
You're welcome.
I think a really good place to start for everybody obviously listening today is just a brief intro into kind of your career so far. So what is it that got you into IR35 initially? Is this all that you've ever done in the kind of tax space, and really where did it all begin?
It all began back in Lincoln, in my hometown. So I'd gone to college for 2 years after leaving school, and then after sort of completing a business studies course, didn't really know what to do, and I ended up joining the Inland Revenue as it was then. That was in 1980, and I think it's appropriate to sort of just quash a myth that's out there that people, I've seen on various websites people referring to me as an ex-inspector of taxes. I was never that, because I never served long enough in the Inland Revenue to become an inspector. But so after a short spell in the revenue, I left to join a small firm of accountants in Lincoln, and then I spent the remainder of the 1980s and the whole of the 1990s working for various sized accountancy firms in sort of tax senior and managerial capacities. And then I joined Kudos in 2002, and it was there that I started to specialise in employment status work, particularly IR35 and inquiry work in general. And during my time at Kudos, I successfully defended the vast majority of over 500 contractors in IR35 inquiries. And you might recall that I successfully represented Gensel Software Limited at First Tier Tax Tribunal in 2017 during that time. And then in 2019, January 2019, I joined Kingsbridge as head of tax, which was the same role that I'd occupied when I'd left Kudos. I qualified with the Association of Taxation Technicians in 1993, and I've been working in tax now. It is exactly 40 years. I've got a broad knowledge of tax, but now, my bias is in employment status work, tax inquiry work, and personal tax. So that gives you a general overview of my tax career to date.
Perfect. And I guess just focusing then in on IR35 in isolation, I've often heard, having the pleasure of obviously working with you, Andy, I've heard a lot of your opinions around the way the revenue operate in regards to IR35 and how it's evolved and changed over the years. And certainly since its introduction, have you seen any kind of major, that be from case law in the cases that you've worked on, or in the way that the revenue pursue this, and really, how's the attitude shifted? Has there been a difference in when this was introduced to now, and if so, what is the difference in both the way that the revenue pursue it and also in the way that you may look at actually defending a contractor?
I think when IR35 was first introduced, there was back in 2000, there was a zealousness about HMRC then. We saw a lot of cases, and we saw that cases were took quite a long time to resolve, and that was really to do with HMRC's attitude, if you like. They were quite stubborn, and that therefore, inquiry cases became quite protracted, and that can be quite stressful for a contract or anybody who's suffering a tax inquiry. And so that went on for a good number of years, and then sort of round about, I suppose, if we said about sort of 10 years down the line, we saw quite of a relaxed attitude really from HMRC, and there weren't so many cases, and we were able to sort of reach resolution with HMRC much more quickly, and they seemed to be taking a reasonable attitude towards IR35. But I have to say that old attitude that was first there has come back. I've seen it. The last 4 or 5 years. It's again you get very sort of stubborn status inspectors. And I guess, obviously one of the motivations is they're chasing revenue. But by the same token, I mean, IR35 is a terrible revenue raiser anyway. But yeah, it's been quite difficult. I mean, Gensel Software Limited, the only reason we went to first tier tax tribunal was because of that stubbornness, that stubborn attitude. It should never have reached that far. And I think many people agreed that it shouldn't have done. So yeah, and the few cases that I've worked on whilst being at Kingsbridge, bar a few, I'm seeing that same sort of blinkered attitude, if you like, that they're prepared to argue that black's white and not listening to the facts.
Is because one thing that certainly agencies that I speak to are highlighting, Andy, is they're wanting to know why does everybody else interpret status differently to HMRC, and is this the stubborn attitude that you're talking about, in that they are literally just interpreting the kind of case law and what the courts say, and ultimately what everybody else is thinking differently to everybody else?
I think, Keith, that really highlights and demonstrates the subjective nature of IR35. The legislation itself, it isn't clear cut. It's filled with grey areas and open to interpretation. So that there are some things that we would probably agree with HMRC over in their interpretation, but there are other areas where we don't. And sometimes, you will get status inspectors who are deliberately interpreting facts to suit their case. I'll give you a case in point. So in my last year or so at QDOS, I was defending a radio broadcaster, and he broadcast for Virgin, and it wasn't Mr. Evans. And he had several sources of income. He got good, strong evidence from Virgin. They gave HMRC 2 lots of written evidence about the working practices that all supported the case being outside of IR35. Yet HMRC, because it did, they wouldn't accept that. they started referring to the contractual terms and tried to argue the case based on that. But with that case, the thing that really stood out, apart from the different sources of income that the client had, was that he got his own equipment that he used for broadcasting. So when he went to the studio, because the Virgin didn't provide this particular piece of equipment, when he rolled up at the studio, he installed it, and then he did his radio show. And when he finished that, he took the equipment back home with him, and the equipment cost him about £1,000, somewhere in that region. So that I mean, it is a major point when we're looking at employment status. The provision of your own equipment, and yet HMRC just wanted to dismiss it. And it was like them putting their hands over their ears and just not wanting to listen. So when I left QDOS, I mean, that had still not been resolved, and it should have been, so that's the kind of attitude that you're up against at the moment.
And as we obviously move forward and kind of more recently, we've certainly seen it ourselves, which we can cover off in just a moment. But how do you see the revenues attitude developing and changing as we go into these kind of next bout of changes coming into the private sector?
Well, I think with the off-payroll rules and their introduction in April 2021, HMRC at the moment have said, well, sort of, we're committed to an education programme and supporting businesses, and I think they, to a certain degree, they will be occupied with that. It's like with any sort of a tax inquiry at all, HMRC risk assess it first. They've got a whole source of information available to them, and what they look for is behaviour and patterns of behaviour. So what you normally see with introduction of new legislation is that HMRC normally let it bed down for a couple of years before they start their compliance activity. So I think what we'll see is HMRC probably looking at the RTI submissions and looking for a trend before they actually act upon that. What they might do is they might, once they've sort of seen those trends 6 months plus down the line next year, they might send out intervention letters to end clients, or the sort of one-to-many letters, or otherwise known as nudge letters, just that create this doubt in taxpayers' mind. But I don't think you'll see a lot of compliance activity, certainly in that area. The other factor to bear in mind is that HMRC will probably deploy a lot of resources in sort of chasing coronavirus job retention scheme payments that have been made in error or have been fraudulently claimed. So coupled with that, that's why I don't see you'll see a lot of compliance activity next year, or probably even the year after that.
And I know a lot of agencies and then clients are perhaps anxious of the way the revenue are going to pursue this, and I guess in the last sort of 12 or so months we've maybe seen a flavour of that with what's happened at GSK, and obviously we'll be very familiar with that. We defended quite a large number of those contractors. And Andy, do you want to give us a bit of an insight very quickly into kind of what that entailed and also what's actually come of it? Because as far as I'm aware, we've still not actually received anything in response from the revenue, which is industry-wide as well.
No, that's absolutely right. So I think this was back in August 2019. HMRC sent out about 1,500 of these one-to-many letters, like I say, otherwise known as nudge letters. And as I say, it's a tactic that's sort of that HMRC have employed over a number of years. It's a psychological tactic. And those letters started off by saying it's our view that the contract between your PSC and GSK comes under the off-payroll rules. Said no more than that. So automatically, the taxpayer might think, oh, have I done something wrong? Have I got my IR35 status right? So it created that sort of doubt and I suppose a degree of fear as well. And so what they're doing there is it's an attempt to sort of nudge, if you like, taxpayers to review their tax position and make them feel that they're under the spotlight, even though those letters are they're not the beginning of a HMRC investigation. They don't have any formal legal underpinning. And so ultimately, if you wanted to, you could just ignore that letter. The problem is with that is that as you read further down that letter, it says, well, if you don't respond, you might be subject to a compliance review. So if you don't respond, you might be bringing upon yourself an inquiry. So we took the view, and there were different views by other advisors out there. But our view was that it was probably better to issue a full response. And that's exactly what we did. So we reviewed the contractual and the working practices of these GSK contractors and submitted a full response. And what we were hoping to do was persuade HMRC that that the vast majority of those contractors were outside of IR35, and we asked specifically for HMRC to confirm that. And you are absolutely right. We had no response whatsoever. Now, out of those 1,500 contractors, I think we had about 6% of those. I think we were running up to about 90, 100 to 100 contractors. Might have even been more than that. But no, not one response, and it didn't surprise me, simply because it's these one-to-many letters. It's dead easy for HMRC to send these out, because there's there's no intelligence gathering at all. All they need are names and addresses of contractors who have been working to one particular end client, and that's it. Bob's your uncle. They just send these out en masse. So it's likely that some GSK contractors may well have thought, I've incorrectly self-assessed my IR35 status and caved into HMRC, and they've got some revenue that way. That's what it's designed for. Ultimately, if they generate some revenue from it, it's served its purpose.
And I guess just finally on this point, are we likely to see anything industry specific? So obviously GSK was a big push in the kind of scientific area, obviously by the nature of kind of what they're doing. And then I know slightly earlier this year, perhaps January, February, we had a kind of influx of a handful of pilots, all with actual I-35 inquiries. Is it likely to be in the same direction? Is it likely to be kind of industry?
If the RTI submissions are actually showing a trend in specific industries, but ultimately, I think it's likely to be more client specific than industry specific.
Yeah, perfect. And just moving on then, so I guess that brings us nicely onto the Kingsbridge status tool, which I know you've had a very heavy hand in. Obviously the kind of development of. We're lucky enough to be able to call it a award-winning IR35 tool. We've won the award of the Broker Innovation Awards for the tool. And do you want to give us an insight, Andy, into kind of what goes behind that? So when you're creating a IR35 status assessment tool such as ours, what goes into that? What initially are you thinking of when you start to say, right, let's look at a piece of technology or software that can effectively assess IR35 status?
Well, it might be just easier just to go through the sort of history of how we developed ours. So back in 2019, there was a need to develop our own status tool for probably two reasons. One, to give assessed, but two, there was a number of competitors such as Kudos who are offering that such a tool in the marketplace. So we needed to be better equipped to compete. And initially what we did was create what was called Status Indicator for Tax, SIFT. And that was just really just a simple 9 questions based test answering yes or no. And that the questions revolved around personal service, the right of control, mutuality of obligation, and then we added a financial risk question. So really all it did was initially it was like a litmus test, and once contractors had answered that, it placed them into one of the 3 categories: inside, outside, or indeterminate. Now, other than the outside determination, if they were in that indeterminate, then further work would need to be done, and it would be scrutinised further. That served its purpose, for those formative months. But then what happened was that I was asked to undertake IR35 audits for those clients of ours who wanted to aspire to become panel members. So that was basically, obviously you will recall that if a panel member, if their processes, their tool passed our scrutiny, or my scrutiny if you like, then they could be admitted to the Kingsbridge panel, whereby we would accept an outside IR35 determination for the purposes of the insurance, and any claim based on that determination would be automatically accepted. So as I was carrying out a lot of these audits, we came across a tool called IR35IO that had been developed by Tom Cooksey, who himself was a contractor, not an IR35 specialist, but a contractor. And Kingsbridge were impressed by its speed and efficiency. And so ultimately what it's done is it's acquired it for itself. And now what we've done is we've taken a useful tool to begin with, and we've embellished it. And we embellished it to include recategorization of some questions, and we introduced a few more questions to ensure that all the major status tests are covered. So in any tool, and this is what ours does, you would want to ask questions about personal service, which includes the right of substitution, the right of control, mutuality of obligation, financial risk, business on own account, provision of own equipment, and integration. So you're asking all the important questions about employment status. Obviously, as you know, that there's other tests that are thrown into the mix, but they're minor, and really they don't need to be considered unless we're looking at borderline cases. So essentially, once we'd sort of remodeled the tool, it's still retained its speed and its efficiency and its accuracy, and it's a jolly useful tool. Now, because of the subjective nature of IR35, I personally don't believe you can fully automate those tests. And some tools that I've seen out there, they do offer the ability to add further evidence in support of yes/no responses, which I think is a good thing, because ultimately, if a contractor can provide strong supporting evidence that helps their case, then all the better. So I do like to see those boxes on a status tool where you can add evidence where necessary. So I think that's answered your question.
And I think, Andy, what I'll do is just touch on something you said. So you mentioned there about the notes and evidence being obviously quite important for both not only the contractor, but also, you've got the end client and the agency perhaps in the mix that are answering these questions and providing evidence to ascertain IR35 status. But where you have a fully automated process, you don't have anybody then that can interpret those answers and those notes and pieces of evidence. So I think what I'll let you explain in just a moment in a bit more detail than I'll put it. We found it beneficial to everybody in our process to adopt not a fully automated approach, not a completely manual option, but a middle ground hybrid tool. And as far as I'm aware, it's the only option in the market today which actually encompasses this hybrid option, whereby if the status is clearly inside or clearly outside, then we can rely on the tool in isolation to provide that IR35 status based upon everything you've just covered there. But where you do have that question mark over IR35 status, and perhaps where either the supply chain needs its hand holding, or where you have, as you say, notes and evidence that have been provided to give context to some of the answers that are being given, there ultimately has to be someone on the other end of that can determine the status if there is that question mark with the additional notes and evidence. So how important was it for you that Kingsbridge actually adopted that hybrid option, and that we've actually still retained the expertise that we carried over with the old tool into this tool, and we're not just relying on the technology to operate in isolation?
Yeah, well, I think I alluded to it earlier, Ryan. I think that's very important, because just ticking boxes on an automated test doesn't always tell the whole story, and probably it becomes more acute where the tool could actually be throwing up an indeterminate or borderline result, if you like. So where you've got that, at least then somebody can look at it our end, and where there's additional evidence been provided, rather than us having to go back to the contractor or end client, whoever it might be, and ask for that evidence, we could make a quicker decision based on the evidence that's been provided that is telling more of the story. Because ultimately in any IR35 inquiry, it's more than just answering yes or no to questions. It's about providing quality evidence that can be correctly interpreted. So the hybrid approach for me is certainly the correct approach, rather than full automation. And plus as well, I think it helps, when you are trying to demonstrate to HMRC that you have taken reasonable care, where you've got more than yes, no answers, and have provided some evidence. I think that goes a bit further in helping to convince HMRC that you have taken reasonable care.
One thing that Kingsbridge discovered, and certainly I'm hearing it, Andy, from a lot of agencies, is where they have used CEST last year. This time around, they're opting perhaps not to use it for many different reasons. But one particular reason that I think is really important to highlight is I guess in two-part question to you. One, is that hybrid option the best for accuracy, where you've got the human that can interact with status, the human that can talk about status, and as we say, guide in the right direction where necessary? But the second half of that question is, where you have those automated tools such as CEST, where you have literally nobody in the background that you can talk to about whether the question's being asked in a certain direction, or whether the question's being asked to probe at a certain answer, because IR35, after all, as you say earlier, it's broad, it's very subjective. It can be interpreted differently depending on sector, how you read it, what kind of position in the marketplace you come from. So how much of a difference does it make to the experience of an end client? Obviously have that ability in the background, and is that the best for accuracy?
Well, I think yes, it is better for accuracy, because you're seeing more of the picture rather than the sort of the yes no answers. And probably just to sort of as a demonstration of that, I looked at a tool not so long ago where it basically, I carried out a few scenarios on it, and there were a number of results it gave that surprised me, shall we say. It surprised me because they were throwing up inside determinations, and I couldn't understand why. Now, that could have been something to do with their weighting, but I couldn't help thinking that, because what happened was that I put in a mix of answers. So I might have said, yes, there was no personal service, but they were being controlled, and there was and there might have been some mutuality. But when I looked at it, when I was in my mind, when I was completing the test, I knew what the answer was, and that the tool was not throwing out the correct answer. And had I been able to include some evidence in that, and had somebody been looking at it the other end, that the conclusion I would have thought would have been rather different. And so I think that really highlights the reason why you need that blend of automation and human interaction.
Well, it's obviously not just for the purpose of the result, but also, you think of the time it takes to manually review a lot of IR35 IR35 cases, and that is certainly not a quick process. So I'd say, where we've got the tool, or the Kingsbridge status tool, focusing on the easy inside or easy outside of IR35 outcomes, it then allows us as a team to put more into those instances where there is a question mark, and ultimately our expertise is then needed.
Absolutely, I think the hybrid is a good compromise, because you hit on a good point. Manual reviews do take a long time, and they're probably not the way to go, because obviously end clients agencies want speedy results, if you like. But our tool does that, but without actual advice, and will be there to, if needs be, to hold their hand.
So in the run up then to April next year, so we're quickly coming across April 2021. It's it's not that long away now. There's murmurs of a possible second or even third delay now coming up after it was moved from 19 to 20 and now 2021. What do we think's the likely sort of time frame here for agencies? Should an agency or an end client start preparing now? And if they haven't, what should they look to get in place sort of between now and then to then utilise ongoingly beyond April?
Well, almost certainly the answer is that they should, if they haven't made any preparations, they should start now, because April will soon be upon us. If anybody thinks that the off-payroll rules are going to be delayed again, then I think that at the moment that's folly, because there's no noises coming out of government or HMRC that they're going to be postponing the off-payroll rules for a second time, unless we have another sort of long lockdown, which, given the recent news, hopefully is unlikely. So I think you've got to work on the assumption this is happening, and get your preparations in place now. So that means talking to contractors, talking to end clients about not only the contractual terms, their working practices, and partnering with firms like Kingsbridge to produce sort of status determinations using our hybrid tool. So interestingly, a couple of weeks ago, I was watching a HMRC Talking Points webinar, which was on the off-payroll rules, but it was for agencies and end clients. And there was a question put out there, basically, are you prepared for the introduction of the off-payroll rules on 6th of April 2021? 1/3 said they weren't, and 58% said they were partly prepared. So that really, I was quite surprised by that, given that, you know, we've had this extra year to prepare. I know COVID obviously has interrupted a lot of those preparations. I accept that, but you know, 1/3 still weren't prepared. That really did surprise me.
And just obviously on the webinar that you're on with the revenue as well, you know, I was on that webinar as well, and actually posed a question to HMRC regarding the soft landing period. So we've obviously had this 12-month delay, and a lot of people in the industry, I think even including yourself, Andy, sort of believe that the revenue would circumvent their promised 12-month soft landing period, where for effectively 12 months there'd be a soft implementation of the reform. The delay therefore would be the soft landing period to get things right. Do you want to just touch on kind of what that means in practice, and whether agencies or clients should kind of rely on that promise from HMRC?
Yeah, I mean, I think the reason why they said there would still be another sort of 12 months of soft landing was probably due to COVID, and public perception. So what they've said is that they're going to take a light touch approach to penalties. So that's no penalties for inaccuracies in the first 12 months, unless HMRC have evidence of deliberate non-compliance. Now, they did there was a similar approach to this with the employment intermediaries reporting that was introduced 5 years ago. They did exactly the same thing, but that does not mean, you know, that agencies can rest on their laurels and not take reasonable care. They should be doing that anyway, as a matter of course. You know, even if you didn't have this sort of soft landing, they would need to take reasonable care. So it's better, okay, you've got 12 months grace, if you like, that's what you want to call it, but get into best practice of taking reasonable care. So
I think as well, just on that point, Andy, it's obviously worth mentioning that, you know, yes, they've confirmed this additional 12-month soft landing from the 6th of April 2021, but that is only in respect of penalties, not in actual tax liability. You know, I had an agency just last week ask me the question, well, does that mean that if we're caught we won't pay any tax? And no, that you'll still pay what's due, but just not the penalties that they would naturally apply to it.
Absolutely correct. Yes, you're not going to get away with the pay-as-you-earn tax and national insurance contributions. No, certainly. This only relates to penalties. You will not be hit with a penalty for getting it wrong. You know, if it was just basically an innocent error. So unless you've been doing something very deliberate, then it's no penalties for the first 12 months.
So what evidence and kind of compliance processes should end clients and agencies, and I guess even contractors in that kind of same breath, keep to hand if in the event of a inquiry later on they are under the spotlight? You know, what should they be looking to keep at the end of assessing status to ensure that if questioned their review will stand up?
Well, clearly the status determination statement, that actually start point, and then, you know, if you've provided any further evidence to support that determination, that should be kept. So that will include the contract, most certainly, and then, so you know, I mean, I always used to tell, and still do actually, individual contractors when I was looking at an IR35 scenario, where it was the contractor that's exposed to IR35, to keep a dossier of working practices. So, you know, within that sort of keep documentary evidence, if you like, of times that they might have substituted, times where they refused work, those kind of things that really support the assertion that they are outside of IR35. So all relevant evidence that will support that status determination, you should retain that, and then you retain that for 3 years.
So what's going to happen this time? Because obviously I've been involved with inquiries with obviously yourself before, and quite a lot of those inquiries are focused on the conversation that you'll have with the contractor, and then you'll gather evidence obviously from the end client and agency if you need it. With obviously this change, how does that differ? Because some agencies have given concerns around saying, if we have an inquiry, are the revenue going to approach the contractor, but by the time you get that inquiry, that contractor could be long gone somewhere else, and they may not actually still have contact with them. So what's the kind of pitfalls there, and what can agencies do to ensure they don't fall foul of anything?
Right. Okay. So this will be a different approach with the off-payroll rules, because it is not the individual contractor that's being subjected to an inquiry. Ultimately, what will happen first is that HMRC will approach the fee payer, because the fee payer is the one that's responsible for operating pay-as-you-earn and national insurance. But it's likely that they're not going to have details of the day-to-day working practices. They'll be able to provide some information as a start point, but in any IR35 inquiry, HMRC are interested in the end client's version of events. Yes, the contractor's evidence is going to going to be of importance, but of probably more importance, like any other IR35 inquiry, HMRC are more take notice of what the end client actually says about the day-to-day working practices. So fee payer first, and then, like I say, it'll be the end client will be fielding a lot of the questions about the working practices, and that there might be some involvement with the contractor if there's clarification needed. So the inquiry process really turns around, if you like, 180 degrees.
Are there common pitfalls that you think end clients or agencies may kind of fall into pre-April, after April as well? And if there are any kind of common areas where they might fall foul of both the process that's involved, the needs of the legislation and so on, then how can they look to avoid those type of scenarios, especially amid obviously the pandemic going on? Yeah,
I think there's probably 2 areas at the moment. I think the first one's ensuring, that the upper level and the lower level contracts mirror one another. So that's the contract between agency and the end client, and then the agency and the worker. Because if those 2 start contradicting each other, it gives HMRC a good opportunity, or a foot in the door, if you like, to argue to argue over certain facts where they're unclear. Avoiding sham clauses, in contracts. So, for instance, there's no point in putting a right of substitution clause in there, because you think it might be IR35 proof or go a long way to proving that the contract is outside of IR35. If that's not a reality, then it's just a waste of time. HMRC will see through it. So not only the mirroring of those 2 contracts, but also making sure that the working arrangements actually do bear similarity to the contractual terms as well. So, i.e., what's written in the contract works out on a day-to-day basis as well. I think the other area that I'm seeing, and I'm sure you're seeing as well, is that the contracted out services model, that's gaining a lot of traction. And I think there's quite a number of providers out there who see it as an escape route from the off-payroll rules. And what they've got to appreciate is that this is completely different to a traditional recruiting agreement for the supply of labour. This is for the specific supply of services, which goes beyond labour. And so whilst the supplier might have to engage labour in a provision of that service, that agreement goes beyond this, and amongst other things, it's going to include, defining project-specific activities, deliverables, and milestones, detailing all the work to be carried out for the duration of the project or the services, setting out payments to be made on completion and milestones, covering the working agreement between the parties, such as the volume of the work, expected outcomes and quality of work, and time frame for completion, responsibilities and accountability of the parties, and reflecting financial risk and the opportunity to profit in the basis of the charge or the fee. It's recommended that at least between 15 to 20% of the supplier's fee should be an element of profit payable upon milestones achieved. So you can see from those few things that I've just mentioned there, this is much more than a labour supply agreement. And if agencies are getting involved in this, then if they think just window dressing a labour supply agreement will be a way of circumventing the off-payroll rules, then they're very wrong. It's a business-to-business agreement. It's a true commercial agreement for services.
Yeah, I've certainly seen that recently, Andy. It happened last year, I think, as well. And certainly if there is anybody with concerns around a contracted out service and kind of whether it's a genuine contracted out service, there is guidance out there within the employment status manual. But beyond that, come and speak to us. We're more than happy to help in those situations.
I think that people will need to, Ryan, because the HMRC's guidance, it gives 4 scenarios, and it basically gives an outline but no detail. So and the devil will be very much in the detail, and I think clients would need to sort of consult on that model, certainly.
I think just finally, I appreciate we've obviously got questions coming in throughout this session as well. So before we just move on to those, I just want to touch on kind of 2 points. Firstly, you've mentioned a lot here about the kind of key status tests and the minor status tests that we apply to IR35.
Yeah.
How have they changed over the last kind of 20 years, especially in your time defending contractors? How have they changed and developed, and has there been any sort of kind of common ground, I guess you would call it, with the revenue on any of them, or has it always been a kind of frictious relationship with HMRC?
Well, I think the thing is that a lot of the status tests and the way they're interpreted hasn't changed. I mean, most of these tests have evolved out of the ready mixed concrete case, 1968. I mean, and that determines the vast majority of IR35 cases. It's incredible to think. There are cases that come along that sort of do put a different slant on things, most certainly. And there are sort of flavours of the month, if you like, where HMRC are taking a different angle. But essentially, it stems from ready-mix concrete, and then add on to that, other employment and tax case law that we've had handed down to us over the years. So, essentially what we've got, I mean, I've been defending contractors again in IR35 scenarios now for 18 years. And, apart from, probably looking at some of the tests from a little bit of a different angle, much of it has remained the same, most certainly.
Well, I'm certainly very, very pleased, Andy, that we've got you on board at Kingsbridge. That's for certain. I think it's quite obvious for parties that engage with Kingsbridge that they know they can approach us with confidence, and know that obviously, in the unlikely event that they first of all receive a HMRC inquiry, then they're going to be protected. They're going to have the defence available in obviously yourself, with arguably the most successful record in the UK. You know, just whilst we touch on that, if anybody would like to come and talk to Kingsbridge about the solution that we have, so the Kingsbridge status tool and the wider IR35 consultancy offering that we have, then by all means, please do get in touch. I believe we're going to put the contact details in the comment section, so do obviously have a look in there. But we're offering more than just an I-35 status tool here. You know, we're really offering a partnership where we can work with both you and your supply chain to get this right. And we'll also send a link to this webinar out afterwards as well, so you'll be able to go back and listen to any of the points that we've covered. And anything that you want to know more on, then obviously get in touch with Kingsbridge and we can touch on that, no problem. We've also got the regular feature that Kingsbridge are doing around the Ask Andy section in the blog and the newsletter. So if there's any points in isolation that we've not covered here today that you'd like some sort of clarity on or answers, or perhaps just more information on, then by all means get in touch with the Ask Andy section, and those questions will be fed straight through to the man himself. So we'll just give it another couple moments to allow for a few more questions to come in before we start the Q&A. So Andy, I'll let you get a drink quickly, and we'll carry on in just a moment. Questions, quite literally dozens and dozens of questions have come through, so we'll crack on with a few of those. Andy, let's start off with the first question here. So the question is, I'm a limited company working through a non-UK agency and I'm paid in foreign currency. I'm the only employee of my company, but I'm allowed to put in a replacement. The end company is a major player in its industry and employs a large number of people. The agency is not interested in IR35 because they are not represented in the UK. Do I fall into IR35?
Okay, so if you're working overseas and you're deemed to be a non-UK resident by virtue of the HMRC statutory residency test, then IR35 is unlikely to be an issue anyhow, as you wouldn't be liable to UK tax on your foreign earnings. If, however, you are UK resident, then you've still got to consider whether or not your company's contract is inside or outside of IR35 by applying all the usual tests of employment status. Now, you state that you've got a right of substitution. If that's genuine and not fettered in any way, that's to say your company is responsible for appointing and paying the substitute. And the end client can't reject that replacement worker for any reason whatsoever, other than professional suitability, then that would be a strong pointer towards self-employment. However, you can't and you shouldn't rely on that alone, and therefore just consider all the other key tests, such as right of control, mutuality obligation, financial risk, business on hand account, just to create that whole picture. And then stand back and then assess your IR35 status that way.
So the next question, Andy, is all in regard to the kind of importance of end client to agency contract during a IR35 inquiry. And the question is, I always ensure my contract between the agency and my limited company is outside of IR35, including getting independently assessed advice, so from the likes of Kingsbridge there, I imagine.
Yeah.
But the concern that this individual has is that the end client and the agency don't give it much thought. So the question really boils down to, are the upper tier contracts, so the contract between the end client and the agency, going to have a detrimental impact on the contractor status if there was an inquiry later on?
So sometimes, during IR35 inquiries, HMRC will seek to obtain a copy of that upper level agreement. That's the one that exists between the agency and the end client, and that's particularly where there's anomalies between the lower level contract, the one that's between the agency and the worker, and the actual working practices. So where you've got those discrepancies between lower level contract and working practices, HMRC normally take a keen interest in the upper level contract. And that it's been a long-standing problem that, in the vast majority of cases, poor old contractors don't get to see that upper level agreement due to it being a confidential document. Now, contractors need to know that the clauses that are contained in their contract they're mirrored in the upper level contract to avoid the sort of damaging effects that poor old Mr. Bessel suffered in the 2008 case of Dragonfly Consultancy. Some agencies will include a clause in the lower level agreement giving an assurance that the mirroring exists, and therefore, you should, as a contractor, ask that the agency to insert such a clause if it's absent from your own contracts. Now, provided your day-to-day working practices support your contention that your company's contract is outside of IR35, then that should give you peace of mind. But it's good practice to draw up what's called a confirmation of arrangements or a statement of working practices document that addresses all the key issues of employment status and have that signed off by an official of your end client who can properly vouch for your working practices. And then you should retain that in your IR35 dossier that I spoke about earlier for production to HMRC in the event that, should your company become subject to an IR35 inquiry, it's there ready for immediate production.
So I guess just to kind of, bolt another question onto that, end clients and agencies need to be ensuring then that obviously the upper level contract that they have in place does also reflect IR35 compliance.
Yeah, absolutely. And we spoke about that, 5 or 10 minutes ago, certainly, about when we were talking about sort of common errors. But you're absolutely right to reinforce that. That's paramount.
Absolutely. So, and just on that, if you do have any issues with your contract, then by all means speak to Kingsbridge, and we can have a look at those. We can review those contracts, no problem at all. So just moving on to the next question that we've got then. So the question is, I'm a consultant serving different clients. Earlier this year, all my clients determined my position as inside of IR35. I am on a regular payroll within my own organisation. Supposing my determinations still stand with the final clients and I keep my position within the payroll of my company, can I claim back the HMRC NI and tax retained by my clients?
So the off-payroll rule legislation allows a contractor to appeal against the status determination as from the 6th of April 2021. And then once that appeal's gone in, the end client's got 45 days to appeal. So, but where a status determination statement's issued prior to 6th of April 2021, a worker can still appeal that before that date, although the 45-day response time limit only starts on the 6th of April 2021. So you can start the process now, but the requirement for the end client to respond, the clock doesn't start ticking until the 6th of April next year. Now, if your client remains adamant that your contract's inside IR35, but you still disagree, then there are two courses of action open to you. You can either make a direct application for a refund of pay-as-you-earn tax and NIC, or you can do that via your self-assessment tax return. Now, either way, that's likely to trigger an IR35 inquiry, and as part of that inquiry, HMRC will place great emphasis on what the end client says about your working practices. As the end client is standing by its original status determination, then unless you have some contrary and convincing evidence, then you may find it quite difficult to persuade HMRC that that original status determination statement should be overturned.
Have you got, I guess just on that, a couple of sentences for end clients and I guess in some instances the agencies on how to sort of best handle an appeal?
I think respond as quickly as you can. I mean, ultimately, anyway, they should be putting in place, and this comes back to probably what we were talking about earlier about preparation. As part of that preparation, you should have this appeal process put in place. So as part of that process, you've got to decide, are you just going to listen to the contractor alone, or are you going to allow your contractor to have representation, be that, so if you're having physical one-to-one meetings, not possible at the moment, I know, but when we return to normal, if you do have a physical meeting, will you allow a contractor's representative, their accountant or advisor, or are you just going to do it remotely, and whereby you invite the contractor to provide evidence that might persuade the end client that their determination was wrong? Either way, that contractor is going to have some compelling evidence to overturn that original determination. So put in place a process now as to how you're going to deal with those appeals. The more quickly it's dealt with, the better.
Perfect, thank you, Andy. And the next question then. I'm over 65, so I'm no longer liable to pay national insurance contributions. I obviously pay income tax and tax on dividends, etc. So does that mean that IR35 does not apply to me?
Unfortunately not. There's no age exemption for IR35, and so whilst you don't have to pay Class 1 NIC, you're still liable to tax, and so therefore you're still going to need to consider your company's contracts as to whether they're inside or outside of IR35.
Perfect. And just to touch very quickly, apologies that we can't get through all of these questions. Unfortunately, this next question will be the last one. I appreciate, Andy, we've not got too much of your time to actually dedicate to this at the moment. So we'll have to cover off a lot of these in a follow-up or in the next session if we obviously put one on. But the final question then, some agencies and end clients are adopting an all contractors are inside IR35 approach, so a blanket assessment in essence, without carrying out any assessment. What is the best course of action when independent assessments show otherwise?
So it's acceptable for an end client to make a determination for a group of workers, providing those workers are engaged under the same contractual terms and conditions, and in practice, where they work under the same terms and conditions as well. But if you make determinations for groups of workers where the terms and conditions aren't the same, then that would not be taking reasonable care. So if the client's not taken reasonable care, the responsibility for the deduction of tax and national insurance payments and the payment of apprenticeship levy and paying those taxes, then that becomes the responsibility of the end client. And so if that's the case, even if the parties already made deductions in line with the original determination, the legislation requires clients to have a status disagreement process, and we've already actually spoken about that, to be in place to deal with the disputes of status determination statements by workers and deemed employers, typically the agency. And as a minimum, that legislation requires the end client to consider the workers and or the deemed employers' representations, and those representations can be made verbally or in writing. Respond to the worker and or the deemed employer's representations within 45 days. We've already spoken about that, and that begins with the day the representations are received, not from when the SDS was issued. Inform the worker and or the deemed employer that they've considered their representations and decided that the original SDS, the status determination statement, was correct, and provide reasons, or inform the worker and again the deemed employer that it's considered the representations, decided that the original conclusion was wrong. and provide a new SDS with the date this new SDS became applicable, and state that the previous SDS was withdrawn, and then finally take reasonable care in making any new SDS and ensuring it contains the reasons for reaching that conclusion. And where an SDS is issued prior to 6th of April 2021, a worker or a deemed employer can make representations before 6th of April 2021, as I've already mentioned, if they wish. But again, just to reiterate, the 45-day time limit for issuing a response by the end client only begins from the 6th of April 2021.
Perfect. And I think that's a great place to obviously finish today on, Andy. So thank you very much for your time today. It's been very insightful, and I hope I think what we'll do as well, Andy, is probably send a few of these questions over to you as well. So we'll try and answer those in the next blog post. But if anybody out there listening today would like to hear more on anything that obviously Kingsbridge are offering and how we can help agencies and clients and ultimately some contractors prepare for the changes next year in April, then please do get in touch via the email that you'll likely see on screen right now, and also the details are going to be in the comments section as well. So you'll see all of the contact details in there with regards to how you can get in touch with Kingsbridge. But thank you very much for joining us. I hope you enjoyed today's session. I look forward to chatting to you again sometime soon.